Getting funding for a solopreneur is near impossible, but there's an easy Bitcoin hack that anyone can use to get $50,000 of funding for their startup. Cryptocurrencies such as Bitcoin go into hypergrowth and collapse phases every 4 years, which is aligned with US presidential elections. Based on historical data, we are just a few weeks away from another explosive growth of BTC. Looking at the US presidential election of November 8, 2016, Bitcoin grew 59% between October and December 2016. The peak of Bitcoin price for that year was a year later on December 17, 2017, with a total of 3,131% return. As for the US election of November 3, 2020, BTC grew 175% between October to December of that year, only to peak on November 10, 2021, a year later with total returns of 554%. What we can conclude is Bitcoin prices have always increased significantly for a year starting around the time of the US presidential elections. Based on historical data, the market is ready for yet another push, and although this is not financial advice, we are likely to triple the price of BTC within the next 12 months. However, that would mean an entrepreneur would need a little over $15,000 to fund a $50,000 business, but there is a hack to significantly reduce the initial capital required. Most centralized crypto exchanges and some decentralized exchanges have access to leverage, which means you can use your capital to borrow much greater sums of money to trade. While this is highly risky, there is a trick to reduce the risk. Here's how I'm funding my business with only $500 worth of Bitcoin, which I bought at $63,000, and use a margin account to borrow against my BTC collateral to buy Solana. I picked Solana because it has been showing significant strength compared to Bitcoin this cycle. I was able to buy $1,141 worth of Solana at an average price of $143. Every time the price drops significantly, I'm buying a little more by borrowing from the exchange. I also bought a little more BTC by using BTC as collateral for a total of $721 Bitcoin for a total of $1,862. So, more than triple my invested capital since I started, but I will need to pay back the loan when I close my positions. The additional risk of using leverage is that you can get liquidated if the price of the assets goes down significantly. In this case, Solana would have to drop down to $102, while Bitcoin would have to drop down to $34,888, which I believe is an acceptable risk. If you consider that less than 1% of startups succeed, generating profits in the crypto industry is vastly more probable than reaching a product market fit. Which is why I will never build a product before I first create a minimum viable treasury to support the business. Assuming the price of BTC grows 3x within the next 12 months, this means I will have about $2,163. Meanwhile, I expect Solana to generate higher returns, probably closer to 7x. Hence, my $1,141 could be worth $7,987 for a total of $10K. However, assuming the price of Bitcoin goes to $84,000 by December 2024, that means my 0.007 BTC collateral, $500, will now be worth $663, which is 32% higher. Thus, my liquidation risk is less probable, so I can borrow a bit more to increase my position size if there is a major dip on the market. This is called position scaling. If I manage my position size and risk correctly, I can get an extra 5x returns. Ideally, I can take profit on major resistance zones and buy back on major support. While this is risky, that's a commonly used hack for people to generate massive returns in a bull market. Alternatively, I can keep the risk and leverage low, but use this minimum viable treasury to attract friends and family investment into my business so I can increase my treasury. I also plan to use a staking pad platform on stake.smooth.fund, which is similar to a crowdfunding system in order to increase my capital. This platform is currently in beta testing. Reach out to me to get an early access. A staking pad enables my customers and community to stake Bitcoin to get an early access to my product. When Bitcoin is staked, yield is generated on various decentralized finance instruments and through market making, and I'm collecting this yield to fund my treasury. Unlike conventional crowdfunding campaigns, my users have a chance to recover their initial purchase even though there is no guarantee given the high risks of crypto investments. Last bull market, I funded 3 businesses with more than $500,000 from a starting capital of only $2,000. So solopreneurs have a unique opportunity to fund their business without wasting months chasing VC money. Once you have reached a minimum viable audience for your product or mission, then you can use a lean startup approach to identify problems worth solving and start building a product. But at that point, you have a community of potential users and a treasury to sustain your business until you reach a product market fit. If you would like to learn more about how to make money online with crypto, please check this other video from Startup Self-Funded, where I go step by step on making my $500 investment. Otherwise, check in the description of this video to join my free private Telegram community.